Here's a summary of the Caesars Entertainment, CZR, 2025 Q2 earnings call, focusing on key financial metrics, management's outlook, risks, highlights, lowlights, and important statements from the CEO and CFO. Overall financial performance. Revenue. Consolidated net revenues reached $2.9 billion for the quarter. Adjusted EBITDA. The company reported $955 million in adjusted EBITDA. Digital segment. This segment had a record quarter, generating $80 million in adjusted EBITDA on $343 million in net revenues, an increase of 24% year-over-year. Las Vegas segment. Same-store adjusted EBITDA was $469 million. Occupancy was 97%, with rates remaining flat. The segment faced a difficult comparison to the prior year, particularly in table games volume and hold. Regional segment. Adjusted EBITDA was $439 million. The segment was negatively impacted by approximately $30 million in one-time items, including construction at Lake Tahoe, flooding in Metropolis, and a lawsuit settlement in Baltimore. Excluding these, adjusted EBITDA would have been flat year-over-year. Key financial metrics and performance drivers. Digital momentum. The digital segment's performance continues to build towards 2021 financial goals, with an LTM adjusted EBITDA of approximately $200 million. Sports revenue grew 28%, and iCasino revenue grew 51% year-over-year. Digital adjusted EBITDA margins improved significantly to 23.3%. Las Vegas softness. The Las Vegas market experienced softer demand, particularly in the leisure segment, with a contracted booking window observed in May and June. This softness is expected to continue into Q3, though bookings have stabilized recently. The absence of major entertainment acts like Adele and Garth Brooks from the prior year's Q2 also contributed to the gaming comparison. Regional reinvestment. Strategic reinvestment in the Caesars Rewards customer database and new slot capital are driving higher gaming revenues in the regional segment. Rated gaming trends are up 8.5%, the best performance in 3 years. Lake Tahoe rebranding. Harvey's Lake Tahoe was rebranded to Caesars Republic Lake Tahoe, with initial guest feedback being encouraging. Phase 2 construction is planned for the fall. World Series of Poker. The event was a success, contributing to the quarter. Management's forecasts and outlook. Las Vegas outlook. Management expects a soft Q3 but anticipates a strong Q4, Q1 2026, and H1 2026, driven by a very strong group calendar. They project 2025 to be a record year for group room nights in Las Vegas, with 2026 expected to be even better. Regional outlook. The company remains comfortable that the regional segment will be flat to up in EBITDA for the full year, despite the Q2 headwinds. July performance in this segment was up, even with the one-time items. Digital outlook. Management is optimistic about the digital segment's performance, expecting to achieve over $500 million of EBITDA in 2026 and continuing to grow at nearly twice the rate of peers in iCasino. Partnership expenses rolling off by the end of 2027 are expected to significantly impact EBITDA positively. Future investments. The company is planning further investments in Las Vegas, including room remodels at Caesars Palace, a new day club partnership at Caesars Palace, and design work for the Vanderpump Hotel at Cromwell. Significant risk factors. Las Vegas leisure demand. The softness in Las Vegas leisure demand, particularly during the summer, poses a risk. The contracted booking window and potential for continued seasonality impacts are noted. Competition. Competitive openings in regional markets influence marketing strategies and required enhanced offers. One-time items. Unforeseen one-time charges, such as those experienced in the regional segment, can impact quarterly results. Dependency on group business. The company's ability to leverage rates in Las Vegas is dependent on a strong group calendar, particularly to offset softer leisure demand. Regulatory environment. While not explicitly detailed as a risk in the transcript for Q2, the mention of the Manhattan casino license submission indicates an ongoing competitive and regulatory process. Highlights. Record digital EBITDA. The digital segment delivered its best quarter ever with $80 million in adjusted EBITDA. Digital revenue growth. 24% year-over-year revenue growth in digital. Improved digital margins. Significant margin expansion in the digital segment. Strong group calendar for Vegas. A robust group booking pace for Q4 2025 and into 2026 in Las Vegas. Rated gaming growth. Strong performance in rated gaming in the regional segment. Debt redemption. Successful redemption of expensive debt, resulting in over $40 million in annual free cash flow savings. Asset-light growth. Progress with Indian management contracts expected to generate significant annual EBITDA. Lowlights. Las Vegas softness. Softer market demand and a contracted booking window in the Las Vegas segment. Difficult Las Vegas comparisons. Challenging year-over-year comparisons in Las Vegas gaming, particularly due to the absence of major entertainment acts from the prior year. One-time headwinds in regionals. Approximately $30 million in one-time items negatively impacted regional segment EBITDA. International softness. Softness observed in the Canadian international market impacting Las Vegas. Most important statements from management. Tom Reeg, CEO. We are bracing for a soft summer in Vegas, but anticipate a strong fourth quarter, first quarter, and second quarter ahead. The digital segment had a fantastic quarter. As you know, we laid out financial milestones in 2021 before launching Caesars Sports, and we remain on track to deliver over $0.5 billion of EBITDA in 26. The momentum in digital is extraordinary, both from a volume and an EBITDA perspective. We expect 2025 to be a record for group room nights in Vegas, and 2026 should be even better. Regional is positioned for flat to slight growth this year, and digital continues to showcase robust growth and momentum. Regarding digital scaling, I believe that strength may be underappreciated right now. The scaling we are witnessing and its trajectory is promising, and I believe we won't be waiting much longer before reaching our outlined objectives. Brett Yunker, CFO. Q3 is off to a great start on the balance sheet front, as we fully redeemed our most expensive debt earlier this month using a mix of asset sale proceeds and our revolver. Annual free cash flow savings from the redemption will exceed $40 million. The BBB brought us good news in the form of increased interest and depreciation expense deductions that moved our pro forma estimate for cash taxes as a percentage of EBITDA down from 5% to 3% to 4%. This summary aims to capture the essential information from the earnings call transcript for a clear and concise understanding of Caesars Entertainment's Q2 2025 performance and outlook.